Okay, good morning everyone. Can you hear me? Good morning. Good morning in this session. Yes, salary is to be started today. A very important topic, guys. So stay tuned for this particular session. First of all, please confirm it to me. Whether am I audible and am I visible to all of you? Am I audible? Good morning. Good morning, Ananta. Good morning, Alfia. Good morning, Garima. Good morning, Khushi. Kartike Mishra. Manav Khera, Rani, Shaina, Anushka, Akanksha, Meraki, Sumit Ghosh. Good morning everyone. Sumit Kumar De, Deepika, Raj Purohit, Meraki, Tanya Bhatt, Akash Chabra. Oh, Akash Chabra is online today. Brilliant. Meeta Kumari, Dhruv Jain. Very happy morning, Dhruv Jain. Dhruv Jain is back from his vacation. So he went to vacation in some dam or something. So he's back now. Good to see you back, Dhruv Jain. Vishnu Prasad, Akanksha Priya, Anushka Yogesh. Try to smile. Okay, the name is very good. Try to smile. Ravi Gupta, good morning. Good morning, Apurva Jaiswal, Sumit Ghosh, Amisha Prajapati. Tanu Priya is on time today. Brilliant. Tanu Priya is on time today. This day will mark as a landmark day in history of direct taxation classes that Tanu Priya has joined on time today. Brilliant. Ankit Shukla, good morning. Ishu Rao, good morning. Laxmi Kumari, Balaji, Wagmode. Srajan Jain, after a very long gap, Srajan is back online to the classes. Ishita Khimani, good morning everyone. So yes, let's begin our session of today. And today's session is really important, guys. Today's session is related to salaries chapter. So yes, for CMA intermediate students, salary chapter is one of the most important chapters of your syllabus, one of the lengthiest chapters also of your syllabus. And yes, guys, you can expect questions up to 10 marks from this particular chapter, even up to 15 marks. So guys, as far as I remember, in the last attempt, section D, the case study section, was entirely based on the salary chapter. So salary chapter is one of the most important chapters of your syllabus, and you really need to do this chapter wholeheartedly, very seriously. It's a lengthy one. There are a lot of computations. There are a lot of provisions which are there in this particular chapter pertaining to the rules as well as the sections. So you need to mug them up, you need to revise them, you need to learn them really properly, and you need to practice them, okay? It's not about mugging up the sections, it's about practice. How well you practice those computations, those exemption computations, that is what is relevant in this particular chapter. So yes, with hope in mind that yes, we are going to conquer June 2022 examination. Yes, let's start our live session of the chapter salaries. Okay, so first let me give you an overview of what salary will entail for all of us, right? So these are the broad framework, these are the broad sections which we'll be dealing with in our salary chapter. What are those sections which we'll be dealing with? Let's see the sections which we'll be dealing with in our salary chapter. All right. So guys, we are going to start with employer-employee relationship. That is the first thing which we are going to see in the chapter of salary, employer and employee relationship. Because employer-employee relationship is a mandatory ask, is a mandatory condition of taxing someone in the head of salary. So the first thing that we are going to study is what is this employer-employee relationship. So if someone wants to tax their the income in the head of salary, so if income tax officer wants to tax income in the head of salary, the first thing which is to be proved is employee-employer relationship. There has to be some binding relationship between employer and employee, where employee is bound to, employee is obliged to work under the supervision, work under the conditions which are laid down by the employer. So that is the employer-employee relationship. So why do we need to judge whether this income is salary or not? So how would it matter? I mean, even if someone is earning business income, and even if he says that, oh no, I'm not earning business income, I'm earning salary income, how would it matter? It's okay, sir. Why to classify some income as salary? Why do you need this classification? Guys, the reason is very clear, that these different heads of income have different tax rates, have different deductions, have different exemptions, have different computation mechanism of computing their taxable income. So we cannot intermingle them, we cannot juggle between them. So if someone is earning PGBP income, then he will be taxed under PGBP. If someone is earning salary income, he will be taxed under salary. If you become over smart, if you want to take more benefits of salary chapter, and if you become over smart and you tell me that, although I am earning business income, but I want to offer it to tax as a salary, then I would require you to fulfill this first condition. Only if you fulfill this first condition, you will be eligible to claim all the benefits of salary chapter. But if you fail to prove to me that you are earning salary, you fail to prove you are an independent contractor, you are an independent person, you're not working under someone, and you fail to prove to me that you have any employer-employee relationship, then I will tell you your income will not be taxable as PGBP, your income will be taxable as salary. So to identify, to classify the income as a salary, the first and basic condition is that there has to be an employer-employee relationship, which means someone should be bound to work under the supervision, under the instructions of someone else. So employer employee relationship, someone should be bound to work under the supervision, under the guidance of someone else. That is the employer employee relationship. So yes, first we are going to discuss the definition of salary. Then we are going to discuss what do you mean by allowances and perquisites. These are two basic things which we are going to discuss. What are allowances? What are perquisites? And yes, last, what are retirement benefits? So these are the three elements of salary apart from the basic salary. There are allowances, there are perquisites, there are retirement benefits. What do you mean by allowances? Allowances means when the employer gives some money in cash form, okay, in bank transfer form, in money form, to meet certain expenses of the employee. That is known as allowances. So allowances are monetary payment for some specified purposes. To meet certain specific expenditure, employer gives some money to the employee. That is known as allowance. Now again, guys, whatever allowance is there, so for example, I stay in say Laxmi Nagar. Okay, there is a area in Delhi known as Laxmi Nagar. I stay in Laxmi Nagar. Okay, the usual rent which is there in Laxmi Nagar for a 2 BHK is say 20,000 rupees. But my employer gives me an allowance of 30,000 rupees. Okay. So for recuperating my expenditure of rent in Lakshmi Nagar, my employer is giving me how much amount? My employer is giving me 30,000 amount. Okay. However, the rent which is there in Lakshmi Nagar area is only 20,000 rupees. So the employer is actually giving me a higher amount of rent. He's giving me a higher amount of rent. So for recuperating or reimbursing my rent expenditure, my employer is giving me 30,000 rupees. However, my reasonable rent which is there in Lakshmi Nagar area is 20,000 rupees. Then guys, the Income Tax Act is very, very clear. It is saying that whatever is a reasonable amount of allowance, the reasonable amount of allowance is 20,000 according to the Income Tax Act. So whatever is the reasonable amount of allowance, that will be exempt from tax, and whatever is the remaining amount, that will be taxable as if salary has been given to you. Obviously, guys, this is unfair. For meeting an expenditure worth rupees 20,000, employer should not give 30,000 rupees. He should not give extra allowance. Why is he giving extra allowance? To curb this situation, to curb this over smartness done by the employer, what Income Tax Act will do? Income Tax Act will specify the amount of exempt allowance. Whatever amount according to the Income Tax Act is a reasonable amount for this particular expenditure. Meeting this expenditure, the Income Tax Act will give that particular amount to you, and the remaining amount will be taxable allowance. So wherever allowance will be given in the question, the question which will be asked from you will be, what is the exempt amount of that allowance? That is the question which will be asked from you. And yes, Income Tax Act has specified rules and regulations and provisions with respect to calculating what is the exempt amount of the allowance. So that is how allowance are to be treated. And yes, guys, in some of the allowances, the Income Tax Act says that nothing should be exempt. Everything should be taxable. So for example, if for meeting certain personal expenditure of the employee, like any servant of his home, if employee has hired some servant at his home and employer is reimbursing the salary of that servant to the employee, then that is personal expenditure of the employee. And if employer is reimbursing that, Income Tax Act says nothing should be exempt. the entire amount should be taxable as salary of the employee. We will assume that employer is in effect giving salary to the employee. So entire amount will be taxable. Nothing shall be exempt. And guys, in certain genuine cases, in certain perfect cases wherever the genuinity is proved, in genuine cases there may be a situation where the entire amount of allowance is exempt and nothing is taxable. Income Tax Act will say, okay, this is the genuine allowance which is being given to the employee. This is absolutely genuine. I will not tax any part of it. Entire amount will be exempt. So 30,000 allowance is given. Entire 30,000 will be exempt. So taxable amount should be nil. So these are the three categories of allowances. Let's read the three categories of allowances which you'll be studying in our syllabus. Category number 1, fully taxable allowance. Category number 2, partly taxable allowance. Category number 3, fully exempt allowance. All depends on genuineness of the allowance. All depends on what amount does Income Tax Act feel is genuine for this particular expenditure or this particular allowance. That particular amount will be exempt in hands of the employee. The balance amount will be taxable. As I've given you the example, guys, 30,000 has been given by the employer to the employee for rent expenditure in Laxmi Nagar, but in Laxmi Nagar, only and only 20,000 rupees is the genuine expenditure, okay? So the balance 10,000 rupees, which is excess reimbursement or excess allowance, which is given to the employee, that particular excess will be taxable as what? As salary in the hands of the employee. And yes, guys, the reasonableness will be decided by the Income Tax Act. You cannot tell me, oh, sir, no, this is not reasonable. Income Tax Act is wrong. You cannot say this. You cannot say this. The reasonableness of the expenditure is decided always and always by the Income Tax Act. Income Tax Act, in its wisdom, will decide what is the amount of reasonable allowance that should have been given. And if anything over and above that amount is given to the employee, then that will be taxable as salary. That is the principle. Okay, sir, we'll be dwelling into the details of this particular allowances in the later part of this video. Then comes perquisites, guys. Perquisites, in case of perquisites, no cash is given to the employee. Nothing in cash is given to the employee. Nothing in cash is given. Monetary benefit, monetary emolument, monetary consideration is not there in this particular case. It is all non-monetary benefit. It's all non-monetary benefit. Non-monetary benefit means you are given that particular facility. For example, if you want a house to live, instead of giving you the rent amount, the employer will give you the house. You please stay in that house. He will not transfer the house in your name. No, he's not transferring the house in your name, but he's asking you to use the house for as many days as you are my employee. You take the house. So, for example, if you want a car, then instead of reimbursing the expenditure of car to you, employer gives you the car itself. So in case of perquisite, these are non-monetary benefits. No money is given to the assessee. Only some asset is given to the assessee or some benefit is given to the employee, and that particular amount is definitely considered as either taxable or not taxable by in the eyes of the income tax law. Now, income tax law will decide that if you have been given a motor car, if the employee is being given a motor car, then Income Tax Act will decide how much amount should be taxable in the hands of the employee. Income Tax Act will decide this. If the employee is given a rent-free accommodation, there's a big house which is given to the employee. Without any rent, he is staying there. Without any rent, he is staying there. Then Income Tax Act will decide how much amount should be taxable in hands of the employee. This is the responsibility of the Income Tax Act. So guys, in case of perquisites, exempt amount is not calculated, but taxable amount is calculated. In case of allowances, exempt amount was calculated. So you get an allowance, right? You get an allowance of say 30,000 rupees. Then Income Tax Act will tell you how much is reasonable out of this 30,000. Only 20,000 is reasonable because you stay in Laxmi Nagar. Oh, please come on. Laxmi Nagar, the rent is only 20,000 for 3 BHK. So Income Tax Act will decide the reasonableness and then it will decide the taxable amount. So in case of allowances, the amount which will be calculated is exempt allowance. And then after reducing the exempt allowance from the total allowance, we'll get the taxable allowance. But guys, in case of perquisites, situation is not the same. You are not getting any monetary emolument. You're not getting any monetary amount. So we don't know what is the amount that you are getting. You are not getting any amount. You're not getting anything in cash. You're just getting an asset. So in this case, Income Tax Act is directly telling you what is the taxable amount of that particular asset in the hands of the employee. What should be the taxable amount? Now, before coming on to the section, and before I actually delve into the section and go into the section, I'll give you a very simple, quiz. Okay, and please hear my quiz very, very carefully. Okay. Now, motor car. If suppose a motor car is given by an employer to his employee, if the motor car is given by an employer to his employee, and the motor car is only and only used for official purpose, the motor car is used entirely for official purpose by the employee, only and only for official purpose by the employee. Please tell me what will be the taxable perquisites. Just your common sense, just your general knowledge. Okay, please write in the chat box what should be the taxable perquisite on the basis of your general knowledge, on the basis of your logic. Okay, I've not taught you the section as yet, I've not taught you the computation as yet, but my question is that if motor car is given to the employee and employee is using it purely for official purposes, he's not using it for personal purposes, he's using it only when he is out of the office for official purpose, then what should be the taxable perquisite? Let's see who gives the right answer. Well done, mind blowing. All of you have given the right answer. Answer is nil. Ravi Gupta says nil. Pooja Jangman says nil. Sumit Kumar nil. Chirag, no perquisite, not taxable. Official purpose means no perk taxable. Satish Kumar, brilliant. Swarna Madula, brilliant, nil. Absolutely correct, guys. You are absolutely right. So the logic behind, please let me repeat, the logic behind taxing perquisite is that if any perquisite or any benefit which is given by the employer to the employee is used for his personal use, then that perquisite is taxable as salary in the hands of the employees. The logic behind taxing perquisite is that if any perquisite is given by the employer to the employee and the employee uses it for his personal use, then guys, that particular perquisite is actually taxable in hands of the employee. If the perquisite or the asset or the benefit is only and only used for official purpose, then there is no perquisite. If the benefit is used for personal purpose, then there is taxable perquisite. So if any benefit is extended by the employer to his employee, any kind of asset is given, any kind of benefit is given by the employer to his employee, and the employee uses is only and only for official purpose, no taxable perquisite. We only tax perquisites when they are used for personal purpose of the employee. If the employee is being naughty, if the employee is being malified in his intentions, if the employee is doing something wrong, he's misusing company's assets, then we tax the perquisites in hands of the employees when he's using it for his personal purpose and not for his official purpose. That is the logic behind perquisites and taxing perquisites. And last but not at all the least, retirement benefits. Guys, retirement benefits means there are certain emoluments, there are certain benefits which are given to the employees post-retirement. Post-retirement means, in India, there are two ages, 60 and 65 for certain professions, certain officials. So either you attain age of 60 or 65 in your respective professions. After attaining the retirement age, you get some amount in lump sum, some amount in totality, or some annuity is given to you. That entire amount is known as retirement benefits. So retirement benefits is nothing but the emolument or the benefits that an employee gets after his retirement, and that is taxable in hands of the employee. Of course, some soft corner is given to those employees because retirement benefits are once in a lifetime benefit which are given to the employees. So some soft corner is there. Exemptions are there for gratuity, for provident fund, for leave, salary, encashment, pension, etc. Some exemptions are definitely there for a certain amount of retirement benefits, but that we'll see in our chapter. So guys, these are the primary areas of study in this particular chapter. And yes, this was the entire chapter in very, very, very brief for all of you. Now we come on to the first aspect of our salary chapter, the first aspect is employer-employee relationship. What do you mean by employer-employee relationship? That is what we are going to see now. So employer-employee relationship means someone is bound to work. There is a master servant agreement. There's a servant agreement. Someone is bound to work for someone else. Someone is bound to work for someone else. That is known as employer-employee relationship. Then payment in employer's capacity. So whatever amount is being paid to the employee, it is being paid in employer's capacity. Employer means a person who has employed the other person, a person who has supervision and control on the other person. That person is employer, and that particular person is paying emoluments to the employees. So payment is in the employer's capacity. That is the second element of employer-employee relations. And guys, you have to demonstrate this, that you have employer-employee relationship if you want to get yourself taxed under salary head, right? So, you can't be over smart. You cannot say that, oh, although I'm earning PGBP income, but let me tax myself in salary. You cannot do that. No, you have to demonstrate employer-employee relationship. Then one very important aspect of employer-employee relationship, contract of service or contract for service. Contract of service means you are ready to service that particular other person, and you are in full-time service of that other person, and you are under contract of service. Then you are bound under employer-employee relationship, which means you are ready to serve the other person for a full-time basis. Okay, on a full-time basis, you are ready to serve other person. So contract of service means where I am serving someone else. Contract of service. Okay, and contract for service means that I am not working full-time with someone. I have taken some work from. So for example, if um, I employ a person to maintain all my ACs. I have ACs in my office. I have 6 ACs in my office. I employ a person. You please wash all these ACs. Please service all these ACs because summers are approaching and I want to use all of them. Okay. He tells me, sir, I will take 2 days to finish the entire work. I tell him, you take whatever days you want to do. That is not none of my concern. I will pay you a fixed remuneration of say 500 rupees per AC. That's it. You take 2 days, 3 days. I don't care. Okay. Just maintain my ACs. All the ACs should be maintained. Guys, this is contract for service. This is contract for service. I am hiring the service and I'm not bothered about what time does he take. He can take as many time as he want. I'm paying for his service. Now, example number 2 versus this example number 2. I keep someone full time in my office for editing my videos, for graphic designing my videos, for designing my thumbnails, for designing everything that I have in my YouTube channel or my Instagram or my LinkedIn. To design everything, I have hired a person on a full-time basis. He's working with me from morning 10 a.m. till evening 7 p.m. This is his work timing. And during the day, I can ask him to do anything and everything. It is not that I will give him a fixed area of work. I can ask him to do anything and everything. He can also amend my books of income tax. He can incorporate amendments in the Income Tax Act in the book. So he can do anything and everything. In that case, the service is contract of service. And only contract of service is employer-employee relationship, because during that time, the person is bound to work as instructed by me. In the initial case, as I discussed with you, in the initial case, guys, the AC repair mechanic is not bound to work according to me. He is free to work as much as he wants. He is free to do whatever he wants to do. At the end of the day, I want the output. Output is that AC should be maintained. Even if he doesn't work for 1 day or 2 days, I don't care. Okay, he will work for 3rd day and 4th day. I don't care about it. But in case of contract of service, I definitely care as to what is the opening timing of that particular person, closing timing of that particular person. Is he working well or not? Is he working fine or not? I want to actually monitor all those things in contract of service. So contract for service, contract of service. In case of employer-employee relationship, there is always contract of service, where I am hiring someone to work for me. Anything, I can give him any work. Okay, that is employer-employee relation. Then last is no agent principal relationship. So guys, agent principal relationship means you must have seen franchisees. Okay, McDonald's, you must have gone to McDonald's store and eaten burgers, and Happy Meal, you must have eaten from burgers to French fries to cold drink. Happy Meal, you must have eaten several times. And in earlier times, there were toys which used to come with Happy Meals, and I used to collect those toys a lot. Now Happy Meal is devoid of the toys. So be it. So guys, these McDonald's are working as franchisee of their parent company. They are independent people. They are working under supervision of their main principal, but they are not bound to follow instructions 100% completely or guidance of their principal person. They are agents of their principal. So still, after being agent, they are free to be agent of, say, Starbucks also. They are free to be agent of, say, Pizza Hut also. They can be agent of several people. So if you are an agent of a principal, yes, to an extent, you are bound to work under directions of the principal. If you are an agent, you are bound to work under directions of the principal. That is very true. But guys, this will not lead to employer-employee relationship. So principal-agent relationship doesn't lead to employer-employee relationship. Since it doesn't lead to employer-employee relationship, the agent principal remuneration will not be taxable as salary. So for classifying the income as salary, you need to have employer-employee relationship. Agent principal relationship is not employer-employee relationship, and therefore not salary income. Okay, sir, got it? Okay, so guys, there are certain incomes which are, I've given some examples of incomes which might be salary, which might not be salary. Let's see. These mostly I've given the examples where salary is not there. Okay, let's read these examples. Okay, we'll have to see whether the relationship is employer-employee or not. Okay, if the relationship is employer-employee, we will say yes, it is salary. If the relationship is not employer-employee, we will say it's not salary. Okay, that is the deal. Okay, okay, sir. First, salary of a partner. So guys, you must have heard of partnership firms. Okay, partnership firms have partners. Salary of partner, whether it is a salary or not, whether it is taxable as salary income or not. To answer this question, I would first of all ask you, please tell me whether partner and partnership firm, they are employer and employee, or they are one and the same thing. I want the answer in the chat box. My question is, partner and partnership firm, whether they are employer employee or they are both same. I mean, in eyes of law, they are both same. The partner is unlimited, has got an unlimited liability, and whatever liability the partnership firm has, partner has to fulfill that liability from his personal assets as well. So is there an employer-employee relationship between partner and partnership firm, or both partner and partnership firm are one and the same thing under law? Both of them are equal under law. That is my question to you. Absolutely, Khushi is right, Garima is right, Achal is right, Jyotish is right, Anshika right, Suman right, Chirag right, Pooja right, Deepak right, Garima right, CM में भक्त same right, very good. Deepika Purohit, Kartike Mishra, Dhruv Jain, same, perfect. So my next question is, will the salary given to a partner from the partnership firm be categorized as salary or not? Yes or no? There is no employer-employee relationship. So will it be categorized as salary or not? Will it be salary or not? Answer is no, it will not be salary. It will be taxed at as PGBP. It is income from PGBP. It is not salary. Perfect, guys. Perfect. Clapping for all of you. Clapping for all of you. Brilliant. Brilliant answers. Achal Singh, Jyotish, Akash Chabra says no. Miraki says no. Jia Chaudhary, no. Swarna, no. Perfect. Manav Khera, no. Perfect. Let's move on. Salary of proprietor. Okay, there's a proprietorship firm. There's a proprietor. Proprietor means he is the owner of the business. Okay. Again, same question. Proprietorship firm and proprietor, are they employer-employee, or they are one and the same thing under eyes of law? Are they employer-employee? Are they two different individuals, or are they one and the same thing? That is the question. Give me the answer in the chat box. Chirag Khemani, Muthu Kumar, perfect. Swarna, perfect. Chirag Khemani, Yashika Jotwani, Vanshi, Aditi Garg, Akash Chabra, Khushi, Devashi, same thing. Perfect. Again, my question is, salary of proprietor. Will it be income under the head salary or not? Will it be income under the head salary or not? Answer is no. It will not be income under the head salary. So guys, brilliant answer, brilliant analysis. That is how you need to analyze in future also. Okay. एकदम सेम टू सेम. ये कौन बोला एकदम सेम टू? हाँ, ये आकाश छावरा बोल रहा है एकदम सेम टू सेम. नालायक. Okay, remuneration to directors. Remuneration to directors. Now, guys, directors are of two types. First, independent directors who are not employees of the company. They are not bound to work under the supervision, under the instructions of the company. Independent directors. Number two, employee directors who are required to work under supervision of the company. Okay, independent directors, not an employee of the company. They are not required to work under supervision of the company, and the employee directors. Answer is very clear. In case of employee director, there is an employer-employee relationship, hence salary. In case of independent directors, there is no employer-employee relationship, therefore income from other sources. IFOS, income from other sources. Perfect, perfect, perfect. I hope there's no problem. No problem, sir. Next, pension to widow or the legal heir. So, an employee dies during his duty or after his duty, he dies. So the pension is given to his widow, his wife, or his legal heir. Now, guys, the person who died, he had employer-employee relationship. The person who died, he had employer-employee relationship. But his survivors, like his widow, does widow also have a relationship of employer-employee with the company? Does widow also have relationship of employer-employee with the company? Yes or no? In the chat box, please. In the chat box, please. Answer is no. Widow doesn't have the relationship, or the son or daughter doesn't have relationship of employer-employer with the company. Therefore, income of widow is taxable as IFOS, income from other sources. Perfect, perfect, perfect. Kartike, Deepika Raj Purohit, Suman Bharti, Mohammad Azam, Amal Raj, Aanchal Singh Rajput, Pankaj, दीपिका राजा, पंकज आज लेट आए, जरूर लेट सोया है रात को, कल रात को लेट सोया है, पता नहीं क्या कर रहा था यूट्यूब पे, तभी आज सुबह सुबह इतना लेट आया पंकज. Aditi Kumari, no. Vinay Kumar Reddy, no. No relation of widow. Perfect, perfect. Very good, guys. Next, remuneration to judges. Remuneration to judges. Now, let me tell you a very important part about judges, guys. A very important part about judges. Judges are not employee of anyone. Judges are not employee of anyone, because if judges are employees, if judges become employees, then they become dependent. Their independence is impaired, because if they get salary from the central government, then they will be biased towards the central government, right? So judges, typically it is said that judges do not get salaries, they are not employees. But guys, in case of judges, even when they don't get salary, even then they are taxable as salaried class employees under the Income Tax Act. Okay. So under Constitution of India, under the Constitution of India, the judges do not get salary under the Constitution of India. Okay. But Income Tax Act says that no, even when they are not termed as salary, but it is taxable as their salary income only. So this is one very rare exception. One very rare exception which Income Tax Act has carved out, that even when judges do not get salary, even when judges do not have employer-employee relationship with the government, still their income is taxable as salary. Even when they don't have any employer, their income is taxable as salary. Because guys, I'll tell you what, Income Tax Act goes into substance over form. Income Tax Act goes into substance of the material, okay? And the substance, in substance, yes, it is not termed as salary so that they are not impaired, so that their independence is not impaired. We term it as salary. But in substance, guys, it's their salary only in substance. So Income Tax Act taxes remuneration of judges as salaries. Then remuneration of teachers. Now this is a very, very important aspect, guys. So you must be passed out from your schools and colleges. There are teachers, right? The teachers who are there, their remuneration is received from the school or the college. That is salary, okay? So, I belong to Kirodimal College, Delhi University. So whatever our teachers used to get as salary from the college, that is known as salary. That is taxable as salary. That is salary income, okay? But once a year, Delhi University calls all the teachers for a special program, for a special assignment of checking papers of the university annual examinations. So guys, over there, the teachers are paid on a per paper basis. So for each paper, they get say 20 rupees, 20 rupees per paper. There's no salary. There's no employer-employee relationship. Teacher can say, no, this year I'm not going to come. Teacher can say this. There's no employer-employee relationship. When university is calling the teacher, so when college is calling the teacher, college and teacher has employer-employee relationship. School and teacher has employer-employee relationship, but university and teacher do not have employer-employee relationship. It is teachers will whether they want to check the papers or not. Okay, so in case of university, when the teachers get remuneration for checking papers from university, it is taxed under IOFOS, because university and teachers do not have employee-employer relationship. University and teachers have an independent relationship. They are working on a consignment basis, on an assignment basis. Therefore, it is taxable as IFOS. Last but not at all the least, member of parliament. Guys, member of parliament are not employees. They are not employees. So their income is not taxable as salary. Their income is taxable as IOFOS, income from other sources. But yes, guys, judges and member of parliaments, they get some extra benefits apart from the regular people. They get some extra benefit, which we are going to study in our respective chapters. So yes, these were certain examples, guys. And these are very, very important from MCQ standpoint. Your MCQs should be very, very clear, and they should be giving out all these concepts very well. Okay. Ravi Gupta says, for checking paper without employee-employee relationship, not taxable as salary. Perfect, Ravi. Very good explanation, Ravi. Very good. Brilliant. I'm proud of you, Ravi. Although Ravi is giving examination in December 2022, and he can actually, he has done his entire syllabus of Group 1. So he can actually not study for next 3 years. I know Ravi. Still, he's studying so hard. So many congratulations, Ravi. Just a joke, guys. Ravi is in our face-to-face batch. So I always, crack some jokes with him. This is of charge of salary. When should salary be taxed? That is the question that we are going to dwell now. When should salary be taxed? Guys, salary is received, can be received as advance salary. Advance salary means, you approach your employer and say that, okay, for next month's salary, please give me in this month itself. That is advance salary. Second is arrear salary for past years. You can get arrear salary for past years. For past few years, you can get salary now. Okay, in the past years, you didn't get those salary because of some dispute. Okay, owner said that no, this salary doesn't belong to you. You said no, the salary belongs to me. So there might be some dispute. So there can be arrear salary of past years. Then there can be outstanding salary. Outstanding salary means the salary which is regularly being received by you. So salary up till say 31st March is given to you on 7th of April. That is the terms between you and your employer. So the salary which is due on 31st of March, which is outstanding on 31st March, that is given to you on 7th of April. So these are three salary which can be received by you. Now, arrear advance salary. Advance salary means you are getting something in advance. It is taxable on receipt basis, that is cash basis. So if I get salary of next 6 months today, I will be required to pay taxes on that salary today. I will be paying salary on cash basis. Similarly, arrear salary, which was disputed salary of past years. So for past 3 years, I'm in dispute with my employer that I should be eligible for a higher salary. My employer is saying you should be eligible for a lower salary. The matter went to court, and court took 3 years to make a decision, and the decision came in my favor, right? So in current year, I got salary for last 3 years. In the current year, I got salary for last 3 years. That is known as arrear salary of past years. So guys, arrear salary of past years is taxable on receipt basis. On receipt basis, the arrear salary of past years will be taxable to you. Yes, sir. And the next one is, just a second, guys. And the next one is, just a second, guys, just a second. Okay, perfect. All right, let's carry on. Right, so I've talked about two kinds of salary: advance salary, arrear salary of past years. These are taxed on receipt basis. Whenever they are received, they are taxed. Last is outstanding salary, which is your regular salary, which is outstanding as on the last day of the month, and that kind of salary is taxable on due basis. So for example, if your salary of 31st March is due on is outstanding on 31st March, it is payable to you by 7th of April, then guys, that salary will be taxable in your hands on due basis. When it becomes due it becomes when you when you are due to receive this salary, that is on 7th of April. So the salary will not be taxable on 31st of March. It will not be taxable on 31st of March. It will be taxable on 7th of April. On 7th of April, that salary will be taxed. So salary will be taxed on due basis. Now, what do you mean by due? Due means when you get the right to receive the salary. When you get the right to receive the salary. So guys, on 31st of March, yes, the salary accrues to you. The salary accrues to you on 31st of March, but the right to receive the salary, the right to actually get the salary in your bank account, that is received on 7th of April. Therefore, the salary shall be taxable on 7th of April. So salary which is outstanding is always taxable on due basis. So these are the three kinds of chargeabilities which are there. Okay, sir. And now we move on to allowances. Yes, one of the most important topics of our syllabus, guys. Allowances. What are the allowances? What kind of allowances are there? Partly taxable allowance, fully taxable allowance. There are three kinds of allowances which we have studied. So yes, let's start this topic. Allowances, most important from the exam standpoint, and in the examination, allowances will definitely come. Definitely they will come. Okay. So allowances are the fixed sum of money amount, fixed sum of money which is given apart from salary to meet particular requirement. So to meet certain requirements of the employee, we give certain money. That money is known as allowance. Now this can be of three types: fully taxable allowance, allowances which are fully taxable; fully exempt allowance, allowances which are fully exempt from tax; and partly taxable allowance, allowances which are partly taxable, which are partly exempt. That is the third category of allowances. And guys, the most complex one is the third, partly taxable and partly exempt, because there'll be a great deal of exemption computation which will be required to be done by you. Income tax act will tell you, oh, you have got allowance of 30,000. According to me, 30,000 is excessive. According to me, the reasonable amount is only 20,000. And the income tax act will give you the method of computing this 20,000 as well. So this is how partly exempt and partly taxable allowances will be actually be computed. So yes, this will be one of the difficult parts of your allowances concepts. These two parts will be relatively simpler because these are fully taxable allowances. So these taxable allowances do not require any computation. Entire amount of allowance, whatever is received from the employer, is taxable in hands of the employee. So no need of computing the exempt amount of allowances. Fully exempt allowance, these allowances are absolutely exempt. So these are allowances, if given in as many amount as possible, you give 1 crore rupees as allowance, you give whatever as allowance, that will be fully exempt. Okay. And primarily these are in the nature of allowances which are given to government employees, or SARC nation employees, or UNO employees, high court, supreme court judges, etc. So primarily these cannot be excessive. Okay. Because these allowances are always made under the by rules or bylaws of government of India. They cannot be excessive principally, right? But still, even if they are excessive, they are fully exempt. Now we come on to the to the main part. So yes, SARC countries, these are SARC countries which are there. You need not remember name of all the SARC countries. Okay. Residency is to be seen in the year of visit or immediately preceding year. Exemption granted for 2 years from the date of arrival. Now this is very, very important point, guys. Please note this point in your register, or please highlight this in your PDF. I will be sharing this PDF with all of you. I will be sharing this PDF with all of you in the WhatsApp group. Please join the WhatsApp group. Test series, PDFs, everything will be shared to you in the WhatsApp group. Okay. Now, residents, teachers of SARC countries are exempt from tax in India. So if you are a professor or a teacher who's a resident of Bangladesh, who's a resident of Bhutan, who's a resident of Nepal, who's a resident of Pakistan, who's a resident of Maldives, or who's a resident of Sri Lanka, if you're a resident of any of these countries and you are a teacher or professor and you come to India and the Indian government pays you certain allowances, they will be fully exempt. The condition is that your residency will be seen. So you should be resident of either of these countries, right? You should be resident of either of these countries, right? Your residency will be seen in the year of visit to India or the immediately preceding year. So guys, naturally, if you visit India in the current year, there's a possibility that you become Indian resident and you are no more resident of these states. If you stay in India for more than 182 days, the residential status chapter, which we had done in our earlier session, guys, right? So if you are a resident in the current year of India, but you are a resident of these states in the last year, then also this exemption will be granted to you. So it says residency to be seen. Residency of what? Residency of these teachers and professor in these respective countries. This is the residency which is to be seen. So residency is to be seen in the year of visit, whenever the person is visiting India, or the immediately preceding year. And the exemption is granted for 2 years from the date of arrival. So guys, if person from SAARC countries visits India and stays in India for 2 years, then for the second year he will not become a resident of the country from where he is in, but he becomes resident of India. Even then the exemption will apply. So the exemption granted for 2 years from the date of arrival. Whenever the person comes to India, till 2 years, he will be allowed for this exemption, that whatever allowance he'll get for his teaching skills, for his tutorial skills, that will be taxable. That will be exempt from tax for next 2 years. For next 2 years, that will be exempt from tax. Okay, sir, got it. Next is the so-called difficult part. But if you are studying from my revision notes, nothing is difficult. Nothing is difficult. आसान है भाई, बहुत आसान है, बहुत आसान है, बहुत आसान. Partly taxable and partly exempt allowances. Allowances which are partly taxable and which are partly taxable. Allowances which are partly taxable and partly exempt. Allowances which are partly taxable, partly exempt. So guys, in these particular cases, exemptions depend on actual expenditure. Whatever is your actual expenditure, that will be exempt, and whatever you save, that will be taxable in your hands. So in these cases, the exemption depends on actual expenditure, right? In these cases, exemption doesn't depend on actual expenditure, and the exemption is told to you by the Income Tax Act. So in this particular case, exemption will be told to you by the Income Tax Act. In this particular case, exemption will depend on your actual expenditure. So for example, I'll give you an example. So for transfer of your job from one state to another state, you are given an allowance of 1 lakh rupees to transfer all your stuff from one city to another city. This is known as transfer allowance. Now guys, you got allowance of 1 lakh rupees, right? Out of that 1 lakh rupees, you had spent only 80,000 rupees. 20,000 rupees is still with you. Then that 20,000 rupees will be taxable in your hands. So the exemption will be granted to the extent of actual expenditure. Whatever you had saved, whatever money you had saved in your pocket, that will be taxable in your hands. So exemption depends on the actual expenditure in these cases. Exemption depends on actual expenditure in these cases. So actual expenditure, when the exemption depends on actual expenditure, these are the cases: uniform allowance, professional development allowance, assistant or helper allowance, conveyance allowance. All these allowances will be exempt to the extent of actual expenditure. So the exemption is equal to amount which is spent. Okay. Now guys, there's a very minute difference between assistant and servant. Okay. Assistant and servant. Please understand, there's a very minute difference between assistant and servant. Assistant is a person who's helping you in your professional pursuits. Servant is a person who's helping you in your home household chores. So only assistant or helper allowance is exempt up to expenditure, up to actual expenditure. If you get a servant for your home, that will be fully taxable. Nothing will be exempt, because for your personal expenditure, employer should not bear the burden. Employer should not bear the burden. If you are Indian resident in the current year but SAARC resident in the previous year, then also allowance are exempt. Yes, Priya Jan, very good question. Very good question, Priya Jan. You understood the concept very well. If we are, please read Priya Jan's comment. I am highlighting that comment on the screen, guys. Please look at Priya Jan's comment. If we are an Indian citizen in the current year, but we were a SAARC resident in the previous year, then also allowance are exempt in the current year. Answer is yes. Answer is yes. So you can be a SAARC resident either in the current year or in the previous year. You will be allowed an exemption for next 2 years. That is very, very good interpretation. Priya Jain is absolutely right. Brilliant, Priya Jain. All right. Okay, let's move on. There is an area which are exempt, which doesn't depend on actual expenditure, but Income Tax Act will tell us what is the amount of exemption which is there. These are children education allowance, children hostel allowance, house rent allowance, truck driver allowance, transport allowance, tribal area allowance, discussed in the next slide. So now we'll be starting these allowances. Okay, guys. Okay, before starting these allowances, guys, these are a set of special allowances which are area specific allowances which are given to the employees who are working in some difficult areas, like hilly areas, mountains, snow-lad peaks. So all those areas are difficult areas where certain special allowances are given, and their exemption is given over here. Okay, yes sir, you have to remember these exemptions, you have to remember these allowances exemption very well. Number one, compensatory allowance, which is high altitude allowance. High altitude means when you are working at a very high altitude. Uncongenial climate. Uncongenial means not favorable. Either it's too much cold, too much warm, or too much humid. Uncongenial climate. Or snowbound. Snowbound means snow is there in that particular area. So if you get a compensatory allowance, which is for high altitude, uncongenial climate, or snowbound mountains in the areas of Arunachal Pradesh, Sikkim, UP, JNK, Manipur, Himachal Pradesh, then the exemption is 800 rupees per month. So suppose if you are getting 1000 rupees per month of allowance, the exemption will be up to the extent of 800 rupees per month. If you're working in Siachen area of Jammu and Kashmir, then the exemption is a very, very high amount. Siachen is a very, very difficult area to work in. You will get an exemption of 7,000 rupees per month. If you are working in places located more than or equal to 1000 meters above the sea level, then you get an exemption of 300 per month. But yes, either of these conditions should be fulfilled, that either should be a high altitude area or a snowbound area or an area which has uncongenial environment. Similarly, guys, if you're working in border areas, so naturally, guys, these exemptions are specially meant for our army people, for our jawans, right, who are working on the borders. So border area, remote locality, difficult, disturbed areas. Andaman Nicobar, Narkodam, Lakshadweep, Minicoy Islands, north of demarcation line, Himachal Pradesh, Mizoram, JNK, UP, Sikkim, 1300 per month is the exemption amount. Continental shelf of India. So the continental shelf of India or executive economic zones, then the exemption will be 1100 per month. Then if you are working in Arunachal Pradesh, except those areas which are included above, you're working in Nagaland, you're working in South Andaman, that is Port Blair, or you are working in Lunglei district of Mizoram, okay, then you'll get an exemption of 1050. So now your question that will be popping up in your mind is, sir, do we have to remember all these limits? The answer is, try to do it. Don't mug it up, don't spend a lot of time. But if you read this list, so I have a few lists over here, right? This is one of the lists, right? I have Tripura, Mizoram, and there are specified areas, right? Then I have another list, guys, which is again area specific list, which is this list, which includes tribal areas, high altitude areas, underground areas, compensatory field areas, compensatory modified field areas. I have this another list, guys. Compensatory high altitude areas, island, which is duty allowance, etc. So I have these two lists, guys. Just read these two lists thrice before your examination. Keep it with you, just read it thrice. No need to mug it up, no need to remember each and every state, but just read it thrice. If an obvious question or an easy question comes from this list, you'll be able to answer it, and that is the only fulfillment of our objective. Just read this list thrice, that's it. Don't try to mug it up, don't try spend a lot of time. Okay sir, got it. Pankaj Kumar is telling us children education allowance exemption and children hostel allowance exemption. So Pankaj Kumar is on the next topic. We are on the previous topic. Pankaj Kumar is very, very fast. What to say? Some students are very, very fast, no? Yes. Okay, next is other allowances. Allowances which are exempt to the extent of what Income Tax Act will tell us. So transport allowance, office to home, home to office, it is exempt up to the extent of 3200 per month. So suppose if the employer gives 6000 per month of allowance for transport, 3200 is exempt and the balance is taxable, 2800 is taxable. That is how taxable amount will be computed. So 3200 is exempt. In case of blind, deaf, dumb, handicap only, this exemption is there only in case of blind, dumb, deaf, handicap. The next is children education allowance. If children education allowance is there, if the employer gives employee in the name of children education some money, then what is the exempt amount? 100 per month, 100 per month. per child, 2 children, irrespective of whether children are studying or not. Okay, even if children are not studying, then also this allowance will be exempt in the hands of all the employees. Then children hostel allowance, irrespective of actual expenditure. Again, even if children are not in hostel, then also 300 rupees per month will be exempt in hands of the employer, in the hands of the employee. Employer is giving, suppose employer is giving 1000 rupees per month of allowance. Out of that, 300 will be exempt, 700 will be taxable per child for a maximum of 2 childs. That is how the exemption will be calculated. Okay, sir. Let's move on. Oh, yes. Now we are going to start, guys, one of the most important allowances. Okay. The chances of this allowance coming in the examination is too high, way too high. Okay. House rent allowance. Okay. House rent allowance. If the employer gives the employee, any amount by way of allowance for meeting his rent expenditure, if the employer gives to his employee any kind of allowance for meeting his rental expenditure, then guys, any 2 children exemption can be taken where higher exemption is there. Yes, Jyotish. Any 2 children exemption can be taken. नहीं पंकज. So obviously जो actual amount received है उससे तो कम ही रहेगा. ये तो obvious सी बात है. ऐसा तो नहीं हो सकता एक्चुअल अमाउंट रिसीव्ड हो 3000 और तुम्हें हमें एग्जामिशन दे दें 3200 की. ऐसा तो नहीं हो सकता ना. वो तो है ही, ऑब्वियस सी बात है. तो पंकज, okay. House rent allowance. House rent allowance means the allowance which is given to meet expenditure of house rent. Now the employer will give some amount to the employee for paying his house rent. Income Tax Act will decide whether that amount is reasonable or not. Whatever Income Tax Act has decided, whatever amount is paid over and above that reasonable amount, that will be taxable as salary. So we will be computing the reasonable amount of house rent allowance which should have been given. That will be the exempt amount. So I've told you, in allowances, we'll always compute the exempt amount. So let's see how will we compute the exempt amount in case of HRA, human resource, house rent allowance. House rent allowance. So exemption to the extent of lower of the following. Lower of the following 3 numbers is the amount which is exempt. Okay. Number 1, actual amount received. So whatever is the actual amount of HRA which is received, that will be the first criteria. Second is 40% or 50% of the salary. Salary is 40% or 50%. Okay. 40% in case of non-metro cities, 50% in case of metro cities. These are the metro cities where the house is situated. So depending upon where house is situated, in case house is situated in non-metro cities, then 40%. In case house is situated in metro cities, then 50% of salary. Now, what do you mean by salary? Guys, salary will only include 3 things: basic salary, DA, which is forming part of retirement benefit, and commission, which is calculated as percentage of turnover. No other allowance, no other perquisite, no other benefit is to be added in the definition of salary over here. Nothing else should be added. So 40% or 50% of the salary is allowed, is the second limit that we need to see. Then the third limit is rent, which is actually being paid by the employee, minus 10% of salary. Rent which is actually paid by the employee, the actual rent which is paid by the employee, minus 10% of salary. Again, salary definition will be the same as I had discussed in the earlier part. So we will compare all these 3 amounts, guys. We will compare all these 3 amounts. Whichever is lower out of all these 3, that will be exempt HRA. That will be exempt from tax. That will be exempt HRA. Now let's see. Exemption not available if assessee lives in his own house and does not pay any tax. So if assessee lives in his own house and he does not pay any rent, then that particular assessee is not eligible for any exemption because he's not paying any rent, guys. Okay. So the assessee is not paying any rent, he's living in his own house and he's not paying any rent, then he is not eligible for a deduction. But yes, if an assessee is living in his own house and he's paying to rent to his mother or his father, okay, and he proves that he is paying rent to his mother or father, then this exemption will be allowed. Okay. There's no harm, there is no restriction on paying rent to your parents. You can pay rent to your parents, that's okay. We will give you an exemption. That is not a problem at all. Yes, sir. Absolutely, Deepak Kumar. The child may be own, adopted, but not illegitimate, or grandchild. So grandchild is not eligible. Perfect. Deepak Kumar. All right, next is truck drivers allowance. So guys, truck drivers are drivers who belong to transport companies, and they are given certain allowances, which are truck drivers allowance. Now, to what extent should they be taxable or exempt? So exemption to the extent of the minimum of the following: 10,000 per month or 70% of allowance received. 70% of allowance or 10,000 per month, that is the exemption which can be granted. But exemption granted to employees working in transport system. So obviously, guys, truck driver means he is working in some transport system. He is working in some company where transportation is an integral part of the company. Okay. Next, exemption is not granted if the employee is in receipt of daily allowance. So if the employee is receiving daily allowance, as well as the employee is also receiving truck driver's allowance, then guys, truck driver allowance will not be exempted. It will be fully taxable, because there's no difference between truck driver's allowance and daily allowance. They are one and the same thing. If you're getting daily allowance, then you will not be given any exemption over here. You please avail the exemption of your daily allowance. That is the restriction. Next is, all right. So next is perquisites. What do you mean by perquisites? Okay. We'll just do one perquisite today, guys, which is rent-free accommodation. Or we just have a background of these perquisites, and we'll do a rent-free accommodation in our next class. Okay. What are perquisites? Perquisites are the benefits which are availed, which are not given in monetary form. They are availed in non-monetary form. That is known as perquisite, which means benefits are given to the employees. Benefits are given to the employees. For example, asset is given to the employee. So perquisite are of two types: taxable perquisites and exempt perquisites. Okay. Taxable perquisites are rent-free accommodation, motor car, sweat equity shares, or ESOPs. We are going to discuss this topic very minutely in our class. So stay tuned for this topic. This is very important topic of your syllabus. Servant perquisite of servant, electricity, water, gas perquisite. Okay. Then free meals, interest-free loan which is given, movable asset, credit card, club expenditure, etc. All these are taxable perquisites. Perquisites which are taxable. Then what are exempt perquisites? Exempt perquisites are tea, snacks, non-alcoholic, food is there, recreational facilities, goods manufactured by employer, sold to employees at a concessional rate, not free. Okay, goods. Then conveyance facility, it is a exempt perquisite. Training, exempt perquisite. Perks allowed by government to Indian citizen rendering services outside India, like in embassy, etc. Exempt. Medical facility, exempt. Interest-free loan up to 20,000, exempt. Rent-free accommodation to certain employees, exempt. Accommodation in hotel or for 15 days, exempt. Computer laptop for office use, exempt. So all these perquisites are exempt. All these perquisites are taxable. So these are the two sets of perquisites which are there in our syllabus, guys. And yes, in the next session, we are going to deep dive into the perquisites. Okay. So yes, that's all for this particular session. We have done our salary definition, employer-employee relationship. We have done allowances. We have done certain special allowances. We have done all those stuff. Okay. So for Sunday, you're sure that allowances are definitely going to come in your examination, in your test, which is scheduled this Sunday. Okay. And perquisites, for perquisites, whatever we can complete in our Thursday's class, we'll be doing that particular part in our perquisites thing. So perquisites will do whatever we are able to complete till Thursday, and that will be your syllabus for your test for the coming Sunday. All right. So yes, that's all, guys. This is all for this particular session. We'll be meeting in our subsequent session with perquisites topic. Till that time, you should do one thing, guys. Do all the practical questions of allowances by yourself. Do all the practical questions of allowances by yourself. Prepare allowances, prepare salary, the basis of charge, all those questions that you need to do yourself. Do it. If you face any problem, just call me up, and do get yourself added in the WhatsApp group to get latest information about the test series, about the PDFs which I'll be uploading for this particular chapter, then the voice notes, everything will be shared in the WhatsApp group. So be a part of that WhatsApp group. So yes, that's all for this particular session. We'll be meeting in our subsequent sessions. Till that time, all the very best and happy studying. Bye-bye. Bye, guys. See you soon on Wednesday. See you. Hello and good morning, guys, and welcome to this vlog. And yes, in this vlog, we are going to discuss a strategy